The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with 100% more macro aggressions than even yesterday. We've got 2.27 billion shares, which is kind of in line what we had yesterday, maybe a little more, a little less. As I said, I suspect we're going to get to 2240. I've been hoping, because the pattern would be much, much better, and a short position would look much better if we pop. Now, of course, we've got the FOMC meeting tomorrow. We've got a lot of earnings also. But my thought is that if the Fed, now looking at data from the last GDP numbers, see that it was kind of all cooked for political reasons, I suspect, for the last quarter, and we're right back to the 1.7 that we've had before, that can't put a lot of faith in those last quarter GDP numbers, that they may take off one of the three interest rates hikes that they've talked about. And I think we may have seen that in gold today. There was a little banter, but it did finally pop back in to the 1,200 range. It was up $18 last time I looked. Really needed to pop back into that range, or I may have thought that it was a good short candidate, but it was kind of down to the last 24 hours where I would have said that gold probably should have shorted if it couldn't have bounced with everything in its favor. So that was kind of interesting. Dollars down a little bit. Now, what would happen? What would be the most bearish thing for gold? What would be the most bullish thing for the dollar? And that is that they reverse themselves tomorrow. Not saying that that's a likely outcome. Just if we get a kind of a big turnaround in the next 24 hours, that would be the one that would really scare me. Maybe think that maybe the right side of gold was lower. No reason to think that today. But if you see this is a head fake, and that would be the probably one day above and then right back below that $1,200 line, I think you could have a lot of action in this market. For the equities, of course, I would really hope that we get one more bounce higher, that the volume falls out and gives me a clear signal, or the volume expands and I buy the next retrace. But right now we're at that point where I've got a position. I like my position. If you've got your position, you can keep your position. We're not dancing around that, nor will we rescind that. What I am saying, though, is we're probably 24 hours away from a big signal in the marketplace, and that would be perfect, which would be the Fed maybe juices the market a little along with earnings. That goes up to a higher high with lighter volume and gives you the all-clear signal to pull the signal to go short. Again, that would probably change my position of 2240 as the low. Right now, that's all I see. We'll see how options are changing over the next day or so. But a pretty important inflection time in the market. Again, someone brought it up in the den, and that is last week I said, there just aren't anybody, just nobody's really shorting this high. And that's always when I get a little bit worried, because guess what? If those natural shorts are not in there to buy the market when it pulls back, that's when you start getting and gaining real momentum to the downside. As always, we like to meet at this time.
The following takes place between 2 p.m. and 3 p.m.
Question in the den, higher high? No, just maybe 3/4. Maybe we get back up just under 2,300 on the S&P. To me, that would be, if we could get up to like 2290, 2295, and the volume just comes out, we never even get to the high. That would be, to me, the most bearish thing. But you're going to probably see, if I'm lucky enough, that's the problem, is that I don't want to get too mired in a lot of positions. I've got 1 or 2 or 3 actually across my newsletters. I don't see putting a huge amount of cash out in this market. If we went up and the volume was incredibly light, then I could say, okay, time to go 100% with a portfolio short. And again, I think we're probably going to see that in the next 24 hours. The Fed meeting is tomorrow at 2 Eastern time. There is no press conference. So, once we get the word on that, if they go a little bit dovish, you could see gold go a little higher. You could see the dollar go a little lower. You could see the market go a little higher. And if it goes up there with light volume, that may be time to pull the ripcord and let every short fly. So we'll take a look at that. In the meantime, as always, we like to start the show off with a little bit of history.
That it's all just a little bit of history repeating.
On this day in 1990, McDonald's opens its first restaurant in Russia, though it has to import cheese from Poland, chickens from France, potatoes from Holland. The outlet on Moscow's Pushkin Square is a huge success. The locals are stunned by its cleanliness and flabbergasted to learn that the friendly, cheerful employees are actually even Russians. If you've never been to Russia, it is an adventure. For decades, it remains the world's busiest McDonald's branch, serving more than 15,000 consumers per day. And I was there in 1995. I think I went back in 1999. I think maybe 98 or 99. I'd have to go dig up my old passports to figure it out. It's kind of creepy to go into a McDonald's in Russia. There's something a little off. It's like those movies where they always say, it was like a duplicate planet or something, but everything is just slightly different. Never really put my finger on it, but a little different. Of course, I went to the McDonald's down there in Paris, which is always a hoot because they like soggy fries, kind of like England. They like really soggy fries, and they don't do the food exactly the same way they do in the States in the McDonald's right there off the Triomphe de, what is the name of that thing? The Arc de Triomphe, the big thing in the center of town, not the Eiffel Tower either. I'm talking about the big roundabout out there. Arc de Triomphe, is that it? I think that's it. Arc de Triomphe. Never took French, took German, so I knew a lot more things about Germany than I did about France, but what else can you say? Anyway, on this day in 1990, maybe even on this day in 1995, I was there. Anyway, the world's busiest McDonald's is in Russia. Put that in your pipe and smoke it, Mr. Commie. Read your little red mouth book. Whatever. McDonald's rules.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
After the bell tonight, we've got Advanced Micro Devices, Anadarko Petroleum, Boston Properties, Electronic Arts, Illumina, Claro, United States Steel. I'll be sitting in for the one and only Tom O'Brien in that 4 o'clock Eastern hour. And, of course, we'll have Andy Hecht from 4:20 to 4:45, maybe even in the end of the hour if we can talk him into that. Of course, good friend. I talk to him most of the time. I was very concerned about gold and silver. He was fairly bullish. We wanted to check in with him and see what he has to say. But my reading of the charts would say that it looks good right now. The one thing would be an instant reversal tomorrow that you would watch out for. And if you get that, then run, Forrest, run. Other than that, probably things look okay. Anyway, as we said, after the bell, we got a lot of earnings. We'll talk about that in that 4 o'clock hour and other things. I don't have a little intro for it yet, but I think I'll get one. But I'm going to start doing a daily segment about nuclear weapons for traders. A lot of what we've been using for technical analysis has been around for 100 years. A lot of it revolves around extremely simple math. And sometimes it works, sometimes it doesn't. We're going to talk about ways that math and science is quickly moving in on this field to let us know what is, as Nassim Taleb said, what is anecdotal and what is science. And even to probably 2012, the tools to do this really did not exist very much for an average investor or even anybody in the vein of a professor at a college who researched this. But the tools are actually now coming out to allow most people to do it. It is not easy, which is good for me because anything that's easy means that everybody else will do it. A great deal of traders are extremely lazy don't want to do the work. And those that do, always a little bit of advantage. Not always. Sometimes you can work real hard and it all comes to naught. I've been working on and with machine learning for the last 2 years almost now. And there's a lot to learn. Is it hard? Not really. Do you have to know a lot of the math? No. Do you have to know the concepts? You do. And that's what I'm going to start talking about. We've had some people email me, and we're going to get more into that as time goes along. Today, we start that out with the first segment, which is ensemble methods for machine learning. Ensemble methods are learning algorithms construct a set of classifiers, then classify new data points by taking a weighted vote of their predictions. The original ensemble method is a Bayesian averaging, but more recent algorithms include error-correcting output, bagging, and boosting. I will turn this into some English that most people could understand. Let's say that you have a chart, and you think that using the MACD along with maybe some other indicator underneath it is the path to nirvana. That if you just did all these things, it would be perfect. But you want to do something else. Instead of just believing what you've seen, which is anecdotal, you actually want to put this to the test. Maybe even change some of the weightings that go into some of the different indicators. And you want to see how all of these things perform together. That's where ensemble methods come along. What they do is, let's say that you had a major indicator like the price, and you wanted to see how that price correlated with 4 or 5 or 6 or 8 or 10 indicators. You may not want to do all of those at once because it may take a while for your computer to do that. But let's say that you wanted to do 3 or 4 or 5 and see which ones actually did perform the way you thought you did. And sometimes maybe you were just fooled by randomness by some of the way these things did. These ensemble methods have a lot of different names. Sometimes you'll see them referred to forest for the trees algorithms. But pretty straightforward. Don't take an enormous computing capability like neural networks do, but they can back and do most of the things that you want to do, i.e., look at 5 different indicators next to price. Which one and how should you weight them? Let's say that you are a trader today and you're looking at the MACD and it turns up. How would you weight that compared to the volume as the stock went up? How would you compare that to anything else in the bag of indicators that go with technical analysis, whatever it is, 9-day moving average, 30-day moving average, 3-day displaced moving average is what I use. If you put all those together, which one would be the best? And how should you weight them? This actual kind of math will solve those things. So how important is the 9-day compared to the MACD? You know, should it be 20% of your decision? Should it be 5% of your decision? Should the 9-day be 50% of your decision? You know, the average human can get about 3 or 4 chess moves ahead. A chess master can get 9. And that's really where the average human gets fooled by randomness over time. But if we're looking for stronger and better tools to use in the future that most people don't use to have an advantage over some folks, then this is it. Now, I've started with a few things. Of course, I wrote my own charting program that we use here on the show every day. In fact, we're going to have kind of a little promotion coming up on this very shortly. So stay tuned for that. But I'll have some bigger things out here. But when I talk to you about the charts that we look at, I try to keep it about as simple as possible. One of the other caveats, I wouldn't call it a caveat, rules of thumb that are used in machine learning and higher statistics in data is a hysteresis. And, of course, there are other things, mostly called rules of thumb. And that's kind of where you start off in these. You have an intuition that maybe this is something that might work. You continue to work on it. You continue to test it, and you find out those things did work beyond. But for me, I needed signals that were unambiguous, that no one at all could debate. That is, that it wasn't subject to a lot of interpretation. Rules work very good. And of course, that's why when you listen to this show, I'm almost always talking about highs that have been broken with significantly higher volume, or tested with significantly lighter volume. Not just 10% or 15, but more like 50%. When we get back, we're going to talk about Ally Financial, a sign of strength, huge volume compared to previous highs. Is it double? Is it more than double? Inquiring minds want to know. We'll be getting into a lot of charts before the end of the hour.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back. Engineers, I think, had to recycle and restart some stuff during the breakout there. No music, no lead in, just a cold open. Anyway, we're talking about Annaly Financial before we left. This did kind of come up with about 5 million shares into that $20.05 high when we were looking at that September 1st high. Now, of course, today, big gap up, lots of volume. I still don't like all high volume lows down here that are untested at 1668. But you do have a sign of strength out here. What you wouldn't want to see again, the danger sign would be a close below $20.05. Even though this thing went higher, you still have some high volume lows untested at 1668. You don't want to hold this thing below $20.05 is the answer on that. Clean Harbors, another one down here for percent advancers, come back and filled its gap down with some strength, it looks like. Gap down on the 10th of January with 500,000 shares, but today up already on 900,000 shares and filling that gap. GGP, which is General Growth Properties, nice little bounce up here. Nothing significant. Volume's about the same, around that $24, just under $24 lows of the last, what is that? November 9th low at 23.69. And, of course, the January 30th, yesterday low at 23.77. Volume actually increased slightly, so still questionable at that end, but one of the bigger winners out here today. Momenta Pharmaceuticals does have some momentum, does have a sign of strength, has very much broken through the previous high that had just under 1 million shares on January 6th. It's done so with 2.5 million shares. Look for about $17 as a level of support in that if it comes back to that level. Another huge move out here today. Talk about not dark cloud cover. What's the other one? A bullish engulfing. I think that's what it's called. NTCT, Net Scouts. I don't know much about this stock. Probably should know more, but man, what a great move out here today. Keep an eye on this. NTCT. And that it. Okay. So we got those. Those are percentage advancers. Let's go to the percentage decliners out here for today and take a look. Cloud Peak Energy down a bit. Volume's not all that exciting. No big signals. Another one out here, Console Energy. Volume has picked up back down to this lows. I continue to see the kind of weakness in energy stocks, not backed up by energy prices in crude, but it makes me think that maybe crude might have a big gap down coming in it if these things continue to not act very well. The Greenbrier Company's big gap down against this huge sign of strength. This is about where you want to be looking at, about $41.50 for support. That's where it actually came in today. Don't like the fact that energy of the last 3 days has been picking up, but one to keep on your radar list if the market starts looking bullish again. A false break of the highs from Integrated Device Technologies. IDTI went above the previous November 25th high that had 3.2 million shares with 2.8. I wouldn't pull the trigger on this, being just a little shy of the volume, but it did gap back into the trading range, and that's what you have to worry about. That normally sets up a retest of these gaps, which is around 21.50 on this IDTI. Rambus didn't have any good news out here today. A big gap down, volume picking up. RYAM, which is Rainier Advanced Materials, that's RYAM. Big move down, big sign of weakness. Watch the volume. It's not as much as you would think it would be already. Ship Finance International. Got a lot of the bulk dry shippers coming out in earnings here over the next couple of weeks. And this is not given a very good signal. Did break out above recent highs that are in the high 14s. You had about 3 previous highs. but it never really had a big sign of strength as it broke through that. Now it's back into that range. That may be a nice or a dark cloud over the earnings of dry bulk shippers, which really have been kind of incoherent in the way that they've moved. SM Energy, another one of these energy companies, blowing down with accelerated volume, going into its 2 million share low of $30.25 from November 8th. Today was 6.2 million shares. That opens up the last major low back on July 8th of $23.55. Sealy Tempur-Pedic, of course, blew apart. Blue Chunks, Ralph's is what I'm trying to say, on massive volume, blew through all the previous lows yesterday, back down a little bit with more. UAA, which is Under Armour, also Ralphed today. Massive volume down, and of course, I don't think you can say anything other than that. But is there anything down below it if you go back far enough? The answer is we're back to this gap up, which was the sign of strength that goes back to the 30th of 2014, actually January 30th, 2014. That gapped up on 18.2 million shares. So I don't know if you can say anything about it other than it's back to its support level. Energy is high on the way down, so if you're thinking there's life after death in this one, you're going to need a lot of consolidation around this $22 area. So probably look at this one again in 2 to 4 weeks and see if you have anything down there. Universal Corporation, which is UVV, down volume, not as big as the last 3 days, but not a lot to hang your hat on. Probably back to the $65 level. And what do we have? Enough time. We're going to go back into some of the charts I've been looking at, which is my scans. We're going to go through the earnings from this morning. Coach, take a quick look here. Coach, a nice move up through the January 4th high that had just a little shy of 4 million shares, almost to 8 million already. So a good sign of strength in Coach. Harley Davidson, big gap down, getting a little bit of that back. Volume pretty much going through this. Let's take a little longer look at this. And, you're back to the high of July 29, 2016 that kind of has been acting as support. You have to look at this gap at 50 as a very probable move with the kind of volume we have today. When we come back, Lilly, MasterCard, MAN, SMG, SPG, UPS, BLO. We've got a lot of stocks to look at from earnings from just this morning.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced points and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. And of course, I had somebody ask about a newsletter subscription trial. Both my newsletters, you can go to the front page of TFNN.com and sign up for a 30-day free trial newsletter. Nothing new out there. We were talking about Harley Davidson, and down some fairly decent volume. Had somebody ask me about Winnebago too, which is kind of in the same vein as this. Of course, it's a lot more subject to the price of oil, of gasoline or diesel, depending on how big they are. But again, a lot of these Harley Davidson and Winnebago sales numbers kind of correlated. I kind of looked at it in the past. I haven't looked at it lately. But a lot of these kind of things that once you get about 10 grand tend to be semi-correlated. Harley Davidson hurt a lot less by higher gas prices, but still seem to track with it a bit. Of course, Winnebago, if gas went to $4 or $5 tomorrow, you'd have a ton of them sitting on the side of the highway. But a pop down. Harley Davidson, just more of a marketing company than anything else now. And it's kind of like when everybody gets tattoos, then it's no big deal anymore. I think it's kind of got to the level where they're probably going to do about as good as they've done. And so many of these bikes just sit in garages and are well maintained that it's kind of tough to think about actually buying a new one. If they ride the kind of bikes that I rode and ride the living daylights out of them to where they're heaps of garbage in 5 years, I think it'd be different. But these guys are low and slow and loud, and I always wondered when eventually there are just so many bikes out there that it doesn't make sense anymore to build new ones. What can you say? Eli Lilly, a nice sign of strength out here on earnings today, but not the kind of juice, not the kind of volume I look forward to. And that would be it. Nice pop out here. Of course, you're back up. You wanted 12 million shares. You got about 5 million shares. Now, part of this reversal out here today could be that the executives of pharma were at the White House meeting with our new president. He's got kind of a very much a stick and carrot approach. The stick today was prices were too high. The carrot was that he was going to see what he could do to get approvals to fly through a lot quicker. Most people don't know just how long it takes to get a drug through and approved. And as long as scientists and doctors don't say too much, he's going to say, we're going to do everything we can to cut any red tape to get drugs out faster as long as they meet safety requirements. And that kind of turned things around. Maybe we'll have to sell drugs for a little bit less, but maybe we won't have to wait 10 years to get the drug out the door. Kind of did that one a favor today. But I'm kind of seeing more and more of the modus operandi of our new president, and that's certainly the carrot and stick approach. MasterCard gapped down with some volume today, at least compared to what it had yesterday. Really want to see how these things close out here during the day, but keep an eye on them. Manpower didn't do much. The NASDAQ, a little more volume than yesterday. You've got enough to at least come up and tag September 2nd, which is $71.26. So I think you get that. Volume is certainly decent enough, but in the next couple of days, we will see whether the NASDAQ pops out. PACCAR not doing a whole lot. SMG, Scott's Miracle-Gro. In fact, this one always has me a little nervous when people at the dog park know what I do, and they ask me, what's the big marijuana stock? First of all, there's what? I think there's one and maybe a second license being granted for actual medical investigation of marijuana, mostly to replace opioid drugs, i.e. heroin. And what's going to happen out here? And I said, someone asked me, what is the single best stock for marijuana and other things like that? And you got to say it's Scott's Miracle-Gro. They got some kind of special pot plant stuff to make it grow very good. And pretty much why this thing broke out and moved almost double. Well, I wouldn't say double. What, $65 to $89.92. I would like to see this thing back probably just a little sub 90 on light volume. What you did see today, though, on earnings was maybe this thing's a little ahead of itself, and you might even be able to get this thing back at 86 bucks. But if there was a way of playing marijuana stocks, it's this and what? GWPH is the only company right now that actually has a license. I would probably want to do a little bit of work correlation between Scott's Miracle-Gro and GWPH to see if these things run together. But you're kind of back on light volume on this stock to 115. Could it get back up to 137? I think this thing's probably in a bigger trading range out here. And energy off the last high of January 10th, not that bad. So you might do that, and you might look at Scott's Miracle-Gro. But I'm a little greedy, so I may want to pull it back a little bit. Simon's Property Group, this thing has been beaten like a red-headed stepchild ever since Macy's and Penny's and every one of the other major mall retailers sucketh big time with closing stores. Probably, again, when everybody sees that a stock is probably headed lower, probably bad times to be jumping on board SPG up today with probably a bit of a short squeeze when everything did not, the wheels did not fall off the wagon automatically. We already talked about Under Armour. I want to start a company called Over Armour. I don't know. They've already got that. It's called Armor. Well, so much for my idea there. You Untied Parcel Service bought the big one today. Bid it or bought it? Either way, big sign of weakness, down with significant volume. I'll look at this tonight and see and read their details and read the transcript of the earnings call so I get a clearer picture. I don't want to say something that I'm not ready to. And I, of course, normally these ones are a little bit more complicated, so I tend to read these ones that are kind of deep later at night. I would say that you are looking at 107 as a good spot where this thing is finally going to bottom. That is the last gap up from the 7th of November. And, you got up there. Energy was not bad. You really didn't have a lot of warnings out here. The energy did kind of come up and just fall out Again, just being wary of being in any stock during earnings now. Valero Energy, when we come back, we'll talk about this one. Down volume more than yesterday. Can we make anything out of this? We will try, even if there's nothing. ELO, when we come back on a very special episode of the Power Trading Hour.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're looking at Valero Energy. Of course, in the 4 o'clock hour, I'll be back to sit in for the one and only Tom O'Brien. We've got many earnings, so we'll look at that. We also have Andy Heck that'll be on for about 20 minutes. I've got many things to grill him over and congratulate him about. We're talking about Valero out here. Down, didn't do much on earnings today. He's trying to hold on to this support level that's around $66. Volume has already exceeded yesterday's. And you really have to go back to this high volume low at $60.35. My guess is this is in a trading range between the $71 high we saw on January 3rd and the November 30th low at $60.35. So a great deal going on there. I had a question to look at IBM from someone who was emailing us. And what going on out here? IBM, you had a nice ramp up, and, volume kind of fell off the last couple of days. I really want to see this thing come back to about 155. I think it really can. And we just need a standard market pullback. Wouldn't ever short this stock because, of course, Buffett is knee deep in it. Thought it was very interesting to see the article that that William Buffett bought, what was it, 18 or 16 billion dollars worth of stock after the election. Why he was saying the world was going to hell in a handbasket. Nothing new for him, though. Anyway, big owner of IBM. This thing could just get back to 170 and continue higher, maybe 168. I would really like this thing to get back to on about 155. If it did, this would be setting up some monster moves, probably back up above 200. So I'd like to get that $45 up to 200 instead of a $20 move or a $30 move up here. So would kind of like the thing to pull back a little bit more. I may not get that. Other stocks of interest, Microsoft continues to always look good out here. Volume pulling back a little on light volume. Still best of breed for technology stocks. Hard to see anything going wrong with that. Amazon, many people talking in the Valley about maybe retribution for some of the things that Bezos is doing. And the discussion that has been leaking around Washington, D.C. are some discussions about sales tax for their part of their business. Many states do not require it. There is some discussion about an executive order for the Treasury Department to enforce sales tax across state lines. And maybe that's a little retribution for the CEO who owns a newspaper who hired 30 people just to go after a single individual who now happens to be the president. So in this giant food fight, who is willing to go to the mat more, and who would it cost more to do so? But Amazon, little discussions out here over the last couple of days. Saw a lot more of them today. We didn't have any real juice today, so maybe those rumors are just that. But between that and some drafts of issues with the H-1B visas that's also circling in this, just be very careful with probably the big names out here, not on earnings, but probably on the news flow and the news cycle, maybe between now and the end of the week, because there is a lot of smoke. No fire yet. Just be careful. We'll be back after the not after the short timeout. We'll be back at 4.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.